Hello, traders out there. How are you doing today? Today is the 30th of December, my last stream of this year, not ours. Jonathan will be with you next year, but tomorrow, not next year, although next year as well. How are you doing today? I hope you're enjoying the holidays. And if you are, looking at the chart as most traders would be, any time of the year, then join me to look at the charts and talk about everything related to trading. We will be looking at the uh, maybe you could call them prediction for this coming year. I would like to call them yearly outlook, right? What is the outlook of coming year? What can we expect based on price action? I see we have many traders in the room. Let's see, we have let me get things ready. We have Hamid as well, and many of you, Abdullah Ahead, Menachem. Thank you all for coming by. I know it's the holidays, and still you guys come on our show, so I appreciate that. We do. Remember, if you like what we do, if you like our show, um, hit that like button, subscribe to our channel, support us in making this even better. Hi there, everyone. I see we have many of our traders, regulars. Louise, how are you doing today, Louise? In the chat. Nice. That's very good to see. So let me put on my screen so we can, as I said, we're going to look at, for those who are trading this week, I am. To look at the current market and outlook for this week. What can we expect? Then we'll look at probably just EU to keep it short, and then we will be looking at the yearly outlook for a couple of assets. I was thinking EU, GU, since those are the ones that I trade, but also perhaps Bitcoin and S&P. Although it's a little bit difficult, but what can we expect next year? I'm sure you would like to see that. So let me know in the chat if you have any questions as we go through the stream. Jonathan will be with you tomorrow. I will be your host today. It will be a shortened version, our normal 2-hour stream. It will be 1 hour, but it will be very enjoyable. Let's see. We have, let me put on my screen so you guys can see what I'm going to be talking about. There it is. There we have it. All right. So let me know in the chat, guys. How has these days been for you as a trader? Have you been able to, capitalize on those great setups? Were they any great setups, right? It's the holiday. Everything is much different than usual. So what is it that you traded? If you traded, and how did it go? Let us know in the chat. We're here to spend some time together. As I said, talk about our passion, which is trading. All right, I will be checking as much as I can the chat to see if there are any specific questions. But let's dive right into our analysis. All right, so let's look at the market for this week. Right, as we know, we start on the weekly, not on the weekly, on the monthly, if we're going to have an idea what is expecting us next week, right? This week. And before we do so, let's check the news, or actually the calendar. There we go. This is the calendar for this week. We, as you would have expected, we don't have a lot of news because it's bank holidays, right? So many of the economic institutions are taking a break So they're not releasing any information on economic how the economy is doing, but also it's bank holiday, so it's going to be a very slow week. Um, but that doesn't mean there isn't going to be any opportunity, right? Even if it's a slow week, even if there are even with the holidays, there's still opportunity. There are less people usually, but I can still catch usually today, one the the two last days trading days of the year. Normally I can still catch a trade, sometimes even two, right? So if you are trading, it is, some people say, you should take off the whole, the whole period, and that's fine because there are less opportunities. However, if you are working today, like I am, there is opportunity for you, and we'll be looking at that. Looking at the calendar, you can see we don't have much except of a high impact news from China, but nothing on the U.S. Only orange folder all the way through Wednesday. There's not a lot. The first one is the unemployment claims coming on Thursday, and then we have the manufacturing PMI on Friday. So there isn't a lot to move the market fundamentally, but still, because it's the end of the year, there's a lot of movement. Big institutional players in the market, they relocate, rebalance their books, so there can be some volume, albeit much less than normal. All right, let's look at the let's check the chat. Michael telling us here that because there aren't any economy numbers coming out, release numbers coming out, that's a profitable a week or day for him. I would say yes, yes, because there's a lot of uh, when we have news coming out, there can be much more surprise, a lot of volatility, and that can take you out of a great setup. But then again, there are others who thrive on those news coming out. I do both of them, to be honest, right? I the news when it comes out, I need to cut my trade in size, and sometimes even cut it completely, because of the news coming in, and I'm too close by to the news, to the price where I enter when the news came out. However, the news itself brings other opportunity, and not a lot, not I mean not all the time, but a lot of the times, the news is actually the catalyst that makes my setup work. So I would say embrace it. Um, the news, that is. Embrace it, meaning maneuver around it if need be, but look for opportunity as it presents them as well. All right, and Sagar saying okay, that he's risking less, and that's usually the case. When you risk less, you usually trade better, simply because your psychological part, the pressure is less, which is a great advice, by the way, for everyone who is starting out, right? If you don't have your psychological part, your edge, well defined, well trained, which is at the beginning and actually throughout the first few years of your trading, it's best to risk less than you would, or you want, because it's going to make you more comfortable, and being comfortable is one of the keys to doing good decisions, right? Doing it from a position of strength, a position of calmness. You're much better to do those, make those great decisions in trading as well as in life, right? All right, so let's look at the market for this coming week. So on the monthly, as I was saying, what do we have? Well, remember, I only look at the market through two lenses, right? One is the formation and the invalidation of order blocks, right? That's one, and the other is there is the formation of quasis, right? So as a reversal pattern, so telling me if the market wants to reverse or not. It doesn't mean it's going to reverse, but usually if it's trying to form those quasi, that's the first step in its way to actually reverse. So to me, that's a great way to uh, you know look at what the intention is of the market and what we can expect. So that being said, what do we see in the market? We don't see any bullish quasi being formed on the monthly time frame. I know this is not for the yearly outlook yet, just for this week. There isn't any structure in here that I can use to know if this, at least on the monthly, that this area here is going to be a reversal point, right? That's what we try to see. Is it going to continue from here, or are we going to have some kind of a reversal? On the monthly time frame, there isn't any indication of that. There isn't anything we can use and say, okay, to the left we have a structure, and that means that there is a greater than usual chance of it reversing. So on the monthly, there isn't anything we can use to give us that reading. If we go to the weekly, there are plenty of information here, and that is that we do have a weekly quasi. This is for those who have seen this before. This is something I go through quite often. That swing high is a little bit lower, but I'll correct it later. And we do have a quasi. That's the bare minimum, right? An established downtrend, and that breaks the structure and makes a high, and is now retesting one of those order blocks that I call entry order blocks, right? Meaning it is an area where the whole structure could reverse from, right? Meaning the bigger structure all the way from 2022 when it had created those structures before. And if that's going to, if it does react favorably, then I could expect price to go at least to the next order block in the relevant time frame, which is the weekly in this case. And if not, actually all the way to the top of the structure, right? The structure meaning this is the beginning, right? That's the beginning of that structure. And then hold on, guys. Yes, so this is the beginning of, as you've noticed perhaps in my voice, I have a little bit of a cold, but that's nothing too serious. So that is the beginning of the structure, right? So that's the break of the structure, and this is the high. So to me, the formation or the completion of that quasi is when it hits this high. So that's one target, one of the two targets that I would have if price were to bounce from here. But we are getting near that area. Now, the idea for this analysis, of course, is to look what can happen next week, right? Those targets are not going to be hit if price reverse from here. They're not going to be hit in 1 week. This week, for sure, well, for sure, I shouldn't say that. But the chances that that price is going to bounce from here and reach those targets this week of holiday, where the market isn't trading as usual with low volume, low ranges. No, it's not going to happen. Most likely not. That's more something for the coming few bars in this time frame, so a couple of weeks at least. That's if there's going to be a reversal. Right, so let's look. Do we have indication? Actually, that's the next question we should ask. Do we have any indication that after the price came into that weekly order block, which is an entry order block on the quasi, did we get a sign of the market that we might have some kind of a pop, maybe even a reversal? Did we? Yes, we did. We did form a fresh order block, which is this area here on the weekly time frame, and let's see. So we did come back to that area, and that's exactly where we are right now. So it is quite interesting, right? Because it did everything we wanted. It created previously this order block, and when it hit it the first time, it had a favorable reaction to it, meaning it seems like it's doing its job, meaning it's attracting the buyers to the market. That's why the fresh order block was created, and we're now retesting that. Let's go to the lower time frame to get an idea what we can expect from this week. Well, actually, there isn't a lot there isn't a lot to see here. We do have a quasi on the daily time frame, which is this structure, right? That's the daily quasi. Let me get this the right way there. And we did come into this area on the daily time frame where we could expect buyers to come in. And did buyers come in? Yes. As you can see, we did get a reaction from the market as we came in. Well, this is a quite big structure. I do see that all the way from 0493 to this low, which is around 0332. So it's quite wide, not very useful for trading, the lower time frames or even a swing trade, basically, because it's wide. However, price did did tell us that buyers are coming in when it within that area, right? Which is this outside bar here. And I say outside bar, let me get it bigger so you guys can see that. And let me get the quasi out of the way, and so we can see how the outside bar was formed. For those who are not familiar with the outside bar, it is the when one bar takes out the low and closes, in case of a bullish outside bar, of course, and closes outside of the above the high of that previous candle. And that's exactly what it did. So to me, that is the sign that the buyers are coming in on the daily time frame, and they're doing it at a weekly area of interest. That to me is telling us that we did have the buyers coming in, and that quasi that I marked earlier, this one, it looks like we are reacting to that entry order block. If that is the case, then it seems like from this point we could be forming or mounting a reversal. So if that is the case, then I want to go to the lower time frame to see any indications of that happening. I did leave a structure here, which has been, this is a bullish order block on the daily that has been invalidated by this bigger candle, right? This big candle. So it's no longer valid as a buy structure, as a bullish structure. However, as we know, as well as in order blocks, as in any other structure of supply and demand, when it gets invalidated, it flips a lot of the times, right? That's the idea behind that break and retest strategy from Jonathan, right? It's a resistance that gets broken, and then it becomes a support where you can enter, and from which the breakout continues. So that's the same idea. I left this order block here just to see, that would be the test for the market to tell us if we're going to have a completion of this quasi or not. Meaning, are we able to break through that order block or not? Because that's the idea. That's if there is a structure, right? There isn't anything bearish right now. If price is going to continue lower, where is it likely to do that, right? It's going to come from that structure, the only structure we have, right? So the only bearish structures we have, I should say. So if that is the case, then this is the test. This is the test of the market for the coming days, if we are going to go higher and complete that reversal, and perhaps even much higher, right? in the next couple of weeks, or not, and we are going to break and use this, not break, reverse from this flipped bullish structure, which is now a bearish structure, and then continue to the downside, right? So the to me, that's the test. Which of the two will happen is it's up to the market, of course. um, we as traders, what we are supposed to do is identify the areas where they're likely to change direction. At least that's how I trade the market, right? So I identify where is it likely to have those reversals, since I trade the quasis and order blocks, and that's where I want to be getting into the market. Meaning, if I see price making that reversal in this area on the daily time frame, that's the moment. To me, that tells me, this is the area. It is doing what it's supposed to do, and you can expect a reversal from here, right? It hasn't given us any indication that that's going to happen yet, and frankly, I don't know if it's going to happen. But if it is, then we want to go into the lower time frames and see any indication. There isn't any indication right here of a bearish reversal yet, right? So the market hasn't given us any information. There is a bearish order block here, but that's not the area yet that it needs to come back. This is the H4, but the structure, of course, is it needs, after it reaches this order block, it needs to start making those bearish structures, meaning those quasis, for me to look for a short. It hasn't done that yet. So everything still is pointing for market to continue go higher until it shows us otherwise. So that means that I'm going to be looking for this week, today, tomorrow, and the rest, in Thursday and Friday, I'm going to be looking, even if they are holidays, I'm going to be looking for indications of market wanting to reverse from that area, because that's going to tell me if the bigger picture is going to be completed or not. Hi there, Marina. Thank you for coming by. Great stuff. So let's see. There's someone asking here, Menachem Adler asking, is it possible to trade that a trade can be closed after the market close on the 24th of December? I'm not sure what you're referring to, but once the market are closed, no trade. If they're open, they're gonna be open till the market opens again. So there's no way a market can close. When a trade can be closed after the market are when the market are closed. I don't know if that answers your question a little bit. You'll have to wait for the market to open again the next trading day in order for you to close that trade. All right, so that's the weekly outlook. So to me, this structure right here, this is the structure that we need, that the market needs to tell us what it's going to do next. Let's look at the chat if we have any questions. In the meantime, I'm going to take my camera off for a couple of seconds. And I'll be right back, but I'll be reading the chat in the meantime. Hold on. All right, so what do we see here? In the chat, we do have a... All right, Menachem has a following comment. I had a trade that closed at 05 on the 25th, and the market did not even post the price that it closed. Menachem, I'm not familiar with that trade. I advise you to contact support, right? Contact support for further explanation. I'm not able to give you information because simply I don't have that. I do know that markets, trades can be processed right, it seems like when the market is closed, but those are settlements after after the close. I don't know if that has anything with yours, because simply I don't have the information, but I know in other situation that you can have a execution of a trade around the close, and the timing can be shown as right after the close. But the best thing is for you to contact support, and they will gladly explain everything to you. All right, let's see if what else. So that's the how do you say, that's the outlook for this week, right? Knowing that this is the area where we will get the information. Is it hard? Maybe I should put my mic a little bit closer or talk a little bit louder if you have difficulty hearing my voice. I was saying this is the structure to me that will tell us whether or not we will have a continuation of this bullish impulse that we have had, that came in at the right area on the Quasi or not. And that's going to tell us where, what our bias should be. Should it be for that continuation or that possible reversal? And continuation lower, continuation meaning from the bigger trend that we had before we reached this weekly outlook. All right. Thank you, Michael, for letting me know that the voice is okay. In that case, I would ask everyone who is not able to hear me correctly or loudly to check your system or your audio settings. Okay, so that is for the weekly outlook for the euro. There, I can make more of what it is, because that is what the market, right? We should manage our expectation, as Pedro would likely say in situations like this. Pedro being the head of our Portuguese speaking community. And in this case, it's true. We need to manage our expectations, right? This is that's what, to me, the market is telling us, which is that this area is the one in relevant, and will tell us whether price will go higher or not going forward. And that's it. There isn't anything else. And until it forms those reversal patterns, there isn't really anything, at least not for me, to do. All right, so let's see. So let's look at the yearly outlook. I am very exciting to look at that, because these are the bigger moves in the market, and if we are able to have a clear reading, that's not always the case, but if we are able to get a clear reading as to what the market is going to do for the rest of the year, you can imagine how powerful that is, as a way to catch more profits in the market, because of course it's going to be a huge advantage if you're able to do so. All right, let's look at and for that we need to go to the higher time frames. Of course, actually we need to go all the way to the yearly time frame. I know it's a bit of extreme. You say yearly, yes, yearly, because you want to be, if you want to know what's the direction of the next candle, basically, and that's what you want to do on the yearly outlook. You'll have to start at the yearly, right? That's the relevant time frame. So if we look at this, we don't have all the information, historical data that starts. I believe the euro was traded before 99. If I'm not mistaken, it became official, but it was traded. You can construct it before that. What do we see, right? Basically, if we enter, if we consult this, let me see. All right, so yeah, so what do we see? We have if we want to to understand who is in control in this time frame, one of the very basic ways to do that is to look what direction are the structures being constructed. Are they predominantly buyer, bullish structure being constructed, or bearish one? If that is the case, then it gives you the reading who is in control just by knowing what structure is being constructed or built, and which ones are being validated, right? So if we do that for EU, you can understand that's the yearly. We can see this, right? Just by looking at this, we did have a couple of structures here. I'm not going to mark them all with a Y, but this is of the yearly time frame. We did have on both sides bearish and bullish structure being constructed, but we are at the at the only missing only 2 trading days away from invalidating a bullish structure, right? That already tells us that the market is very weak. The other sign we have is that the other still standing nearby bullish structure has been violated by quite a lot in the past few bars, actually 2 bars away. If that is going to if that is a sign as well that the market, that order block, the buyers that created this order block have not come back to defend it very well, meaning that's another bearish sign, right? Just by looking at the order block, right? We're not looking at many time frames. We're not looking at indicators, just the order blocks by the creation and invalidations or the near invalidation of those structures. So if you look at this, price action is telling us that the market is weak, and we should, right? We should, at least that's what the market is telling us, we should be continuing to go weaker on the yearly, that is. And if you ask me what's the next station for us to go to, and it's all right there on the chart, I can't say if we're going to reach this, how fast we're going to reach this, right? The order blocks don't tell you how likely, how fast they're going to be reached. It just tells us that's the next station, right? Unless things change, and they haven't changed yet, right? We created a couple of years ago in 2010 and in 2013, we created these bearish structures. And even though we did create bullish structures, we were unable to go back to those higher ranges. Instead, we are invalidating one structure this year, most likely, and the other one, who knows, maybe even both of them, right? That it's going to take about 200 pips. I don't think that's going to happen this year anymore, right? Closing below that order block, but we're going to be closing very near to that range, to that extreme. So, and that tells us, and by doing so, this will probably be eliminated, right? Invalidated, and it will create another bearish order block, right? That's the same script. Price action telling us that the sellers are in control in this higher time frame, the yearly one. So to me, I would say unless things change, we're likely to continue to go lower, maybe reach this order block, maybe not in the next year in 2025, but in some of the coming bars, until we see something else we should expect for price to keep on doing this, meaning that would be dollar strength. And that doesn't surprise me, of course, because what have we seen the last few weeks, right? Trump, the indication of Trump coming in has been very bullish for the dollar. Meaning, if that's any indication of what we can expect from his presidency, then it means it makes sense to expect for prices to go, the dollar to continue to have dominance on the market, being very bullish, right? So that's the Thank you, no problem. That happens when you enjoy what you do. So the um, that is the expectation for EU. It's we can say that's my prediction, and yes, I have no problem with that. But I prefer to say outlook because you know in reality we don't know. But if I had to give a prediction, it would be that price will be going much lower and possibly reaching this order block this year, and if not, maybe the next one. Although I don't pin me on the timing of that. If we go to the pound, all right. So what do we see? On the yearly time frame, we don't have as much information, and that's a pity, right? From to the left, we don't have that much information. There's something else we can do, by the way. I didn't use that yet, but we can use the ranges to give us an idea of what is a likely or realistic movement in any given bar, right? Any given year in this case. And the range for the yearly is let's see, that is 1,230. That's the ATR, right? The average of the last couple of I think I've have this at 4 just to keep it very sensitive. So the last couple of the last 4 bars, 1,235. And if we use that information, right, for in that case, it's not going to be a green one, it's going to be a red one. Let me adjust that. All right. So if we have a structure that is 1,200, that would be it around here. That is the average. This bar, right? This being the next bar. This would be the average range. I mean the expected range of the EU for the next bar. If it is based on the ATR, if it is relatively the same as the last 4 bars, right? If you use that and you think, okay, so how bearish are we in the news, right? If we're going to go much lower, how much can we expect price to go higher before it ends up lower here? Meaning, are we going to have this coming year a pop or a reversal? Because the more bearish a market is, right, the less it retraces in its move down. Okay, as you can see in many, this is simple price action. If you can see, like this bar, the continuation was very quick, right? It didn't have any from the start of the year. It didn't have any retraces, meaning the impulse was very strong, compared to, for example, another movement where this one, comparing these two, right, this one and that one, there was quite a huge retracement, actually making even a higher high, even though it ended up lower, meaning in the end the sellers won the battle. But in the process, they weren't always as strong to defend their turf, right? So the question is, how strong are they going to be the next year? That's difficult to say. But if you say, okay, they're going to be, most of the year, they're going to be, they're going to be above average in terms of dominating the year, then you can expect less than 50% retracement from the close, right? We don't know where the close is going to be, but it's going to be just 2 days from now, right? So if we, for a conservative expectation, you can expect something in this range. This is half of it, right? From the close, roughly the close, it's going to have end up here and have this as the range. Personally, I think it's quite bearish, and as it is forming bearish order blocks, it's probably going to be something in this range. Meaning, if I were to say say what my expectation is for EU, I would say it would be something in this range, right? I don't know exactly, but that's what I would say. So meaning that at some point during that year, it would probably be retesting those lows from before, without, or maybe it will reaching that yearly quasi order block, or that could be something for the next year, right? So that's my expectation based on the uh, uh, price action plus the range of the last couple of bars. Okay, let's go to GU. GU, we don't have, as I said, we don't have that much information. What we do have is uh, just the market structure, meaning the legs to the downsides are bigger than the retraces, or the move to the upside. Even this one, right? They're much smaller. Let me get this out. They're much smaller, right? That meaning that tells us who is in control as well, and it's bearish, it's weak, and it's no surprise because it's a dollar, it's a major as well. So dollar strength is also visible here, but we don't have structures telling us this is going to go much lower, and how much lower is, since I don't have in this price feed, I don't have anything to the left. Let's look at Bitcoin, right? What can we expect? Bitcoin is a bit more difficult. Actually, this price feed isn't good at all. Let me look for another. Another one, maybe from Coinbase or Bitstamp. Does anyone know which one goes further back in time? All right, so this one seems to be going from to the beginning of Bitcoin. Let's look at. All right, so okay, so what do we have here? Yeah, so if we look at the Bitcoin, it's on the higher time frame. We don't have a lot of information. It's been, of course, very recent on the higher time frame that Bitcoin came into existence, but we can say maybe we should go to a much a better a lower time frame, maybe the quarterly or even the monthly, right? What we can see on the market structure, of course, it's amazingly bullish, right? It's impressively bullish. So if anything, if that's I mean, unless you've been living on a rock, we have all seen this asset class come from basically nowhere and becoming an actual mass adopted, institutional adopted asset class, meaning, and it's only beginning, and we don't know how far this will go. So if anything, I think we don't have any indication of that changing anytime soon. So if you just on that thought, we should expect Bitcoin to continue to grow higher, right? Reaching higher levels. There's another thing we can use, which is the crescendo of the ranges, right? If you compare the ranges from the last 3 bars, right? This is 19,809, right? What's the next one? The next one was 35,028.9. And what's the current one that is closing? 58, right? So you already see that crescendo, meaning it's making bigger bars, and it's not doing it just going sideways. It's going it as it is, pushing forward, breaking out and making new highs. So, and that hasn't changed. We don't have any indication in price action. I'm not going to go into the fundamentals of Bitcoin, but we don't have any indication of the price action that this, the size, the comparison of the wick, the size of the wick on both sides, even for this candle, doesn't tell us that there was any kind of big rejection at all. It just kept on breaking every year and making actually not every year, but last year and this year making all-time highs. So the expectations are very bullish, and I don't have any, because we don't have any structure to the left. It's difficult to say anything what we can expect for Bitcoin to reach this year. However, if we continue using this crescendo, right? These ranges, or perhaps we can use the ATR as well. If we look at the ATR, we are currently at, that's the indicator here, we're currently at 32, right? And we already saw that it went from 32 to 58. Now the question then becomes, are we going to have a smaller range here, or is it going to keep on growing? That's the $1,000,000 question, right? So I don't know that. There's no way for us to know, is the next year going to continue its momentum in Bitcoin or not? If I were to say anything, I would say it looks like it's going to be even bigger, right? Because that's the crescendo we have been seeing in the range. I have no way to know that crescendo is going to stop right this year. Maybe it will, but we don't have any indication of that. So I would expect for that crescendo to at least maintain itself. If that's going to be the case, right? That's 58,000 of a range, right? If we mark, right, just using the ranges, I'm not using anything, anything sophisticated, no volume nor fib extensions, although I could. I'm just using the range, very, very simple, not complicating myself with anything else. Let's get a bar that is 58,000, right? Roughly, right? So that's going to be, and it's going to be a green one, of course, because we expect, we don't have any indication that Bitcoin is going to, have a bearish year. Certainly, if you can consider that Trump has won the election and he's, supposed to be make it even better for Bitcoin. Now the question is, where do we put this, right? As a projection, do we expect, right? Let's assume for a little bit that this is going to be a current price of Bitcoin. That's going to be the close of the year, right? So let's assume it's not going to move that much for the next two trading bars. So that's going to be the start. But is the next bar going to be, at least 50% will be higher of that range? Will it? That's the next question. And looking at how bullish it has been and how it's been moving before, I would say, and Bitcoin being very volatile, I would say that it's going to be less than 50% of its range to be lower than the open, right? Of course, we don't know that. That's a guess, right? Just looking at the other bars of previous years, right? As it was, this is what I mean. If we look at the beginning, right? The beginning of the year of this year, how much is this in comparison to the whole range? This is roughly half, right? How is the relationship, the ratio of the lower wick compared to the whole range? If you look at in 2023, it was even less. And in 2022, it was, I would say, we could measure it to know the exact percentage, but just a ballpark figure, it's about less than a third. I would say a quarter, right? So if that's any indication, if past behavior is the best indicator of a predictor of future behavior or price action, that means that we're going to have something similar to be like the lower wick of that range is going to be a quarter, maybe a third below the open of that candle, right? I think that's a fair assumption. If that is the case, then that gives us a projected high of Bitcoin of 131,000. This is not exact science. This is just a prediction based on the ranges and the last couple of bars, right? So it doesn't take any fundamental into account or anything special. And we don't have anything to the left. So this is our best prediction based on those very rudimentary indications. So I would say in Bitcoin is, if it continues its path, it should have a high of around 130,000 this coming year. That's my my prediction. I'll say outlook, but yes. and the low would be at 75 roughly, right? Don't pain me on it, but something in that range makes sense on the ATR side of things, as well as the direction and the bullishness of Bitcoin has shown us, right? Let's look at the last one for our outlook of the year for next year, which is gold. Gold is, we do have more information on gold, right? I'm going to eliminate that. We do have more information than Bitcoin. It doesn't go as far as a lot more than we would expect. But in this case, same as with Bitcoin, gold is making all-time highs, making it difficult because we don't have anything to the left to indicate, what's the next station, where, what structure can stop price. We don't have that. So what are we left with? Well, if we can use any, extensions in terms of, the trend, it has already reached a 100% extension from its last, huge, relevant retraces, right? So, what you typically see, this is the 100% of the extension, and that doesn't mean it cannot go higher, but after 100 it typically slows down on its path. So I would say it has already made its move, right? If we compare to the from 2000, roughly 2000, not 2098 to 11, that's about what, that's 13 years, right, from that move. And if we consider that to be the low, I mean, it's very rough, it's not exact. That's about 9 years. So we still have, if we're going to have the same kind of number of bars going up, if it's going to be symmetrical in that sense, then we still have about 2 years to go for this move, right? Meaning 2025 and 2026, roughly, give or take a couple of years. And to predict the high, that's very difficult. I would say if I were in this trade, I would start taking profits at 100%, the extension, the fib extension of this move, right? Which is where we are right now at 2,713, which we already reached. That's based on, so much higher. I don't have any indication for that. What we can do is look at the ranges, the same as we did with Bitcoin. So the range here on the yearly time frame for gold, let's see, we have here currently we're standing at 474 for the yearly range. If that's any indication, right? If next year, since we're getting at the end of the move, although it can go much higher, I would say maybe I should put back the extension, right? The next line, the next fib extension is at 3,700, right? So we still have about 1,000 to go in terms of room, if we expect it to go 161% the previous move, which I don't have any indication that's going to necessarily happen, but that's the next thing we have on the fib extension, right? The next level. That makes sense. That's one thing. But the question is, will that be reached this year? Personally, I don't like targeting those more than 100%, because I know from experience, from just years in the market, that 100% has a much higher percentage probability of being hit than 161.8, right? So I don't like to be outrageous and ambitious and trying to reach that 1.61.8 161.8 extension level. But that's the next level, the next target, I would say, if we expect price to continue to go higher. We don't have any indication yet that this is the top. So given that, and using the ATR, let's say let's measure just the last couple of bars, just to give a broad expectation feeling from what we can expect. That's let's see, that's 333 338, I mean, the last one before the current one, and that's 455, right? And the biggest one so far, it seems, is 800, right? So for the first projection, I would say, well, do we expect gold to have even a bigger bar next year? Who knows? Maybe. But I would say, not. If anything, on the conflict side of things, there are, kind of hopes of things getting better. At least that's what we read in the press. So I would say, if anything, is going to be, perhaps it's more adequate to take the average of the last couple of bars. If we do that, then we can certainly use the ATR and use that 474. So let's do that and mark a a projection bar of 470 some, right? So that's going to be something like so. This could be a conservative bullish expectation of the range of gold next year, and it takes me since I don't have any expectation if gold is going to continue to go much higher or not. I'm going to be conservative with this, right? And if I do that, that would be that half of the bar, the range, will be above the start of the next year, the next candle, and the half will be at the bottom, right? If we do that, let me mark this a little bit higher, right? That's going to be roughly here. So if anything, I would say I'm trying to be more conservative here with gold compared to with Bitcoin, because of other market condition, fundamental, not necessarily technical analysis. But this is the conservative expectation for gold, and if that's the case, then I would expect gold to hit not much higher than the all-time high it hit this year, right? Meaning this year a high was 2,790, and I would be expecting conservatively 281. And if you think it could be much more bullish, then we could expect price to have, let's say, just a quarter of the lower wick be part of the range. And if that is the case, then we can expect something in the range of 2,950. Not too exact on that. So that's basically that's my outlook for gold for the coming year. So let's see in the chat if we have any questions on these two. From those assets, I think Bitcoin, of course, is the one that offers well, I wouldn't say more opportunity, but it looks very from an investment point of view, very, very exciting. Although you gotta be very careful because it's highly volatile. All right, so let's see. We have Obed with us, and EU is melting according to Muskley. Yes, I agree. EU is having difficulty going up, and on many time frame, not only just the lower time frame. All right, we have yes, the contest, as you can see on the upper border of our screen. We have a trading contest, and the only thing you have to do is buy an account, any size of the account, any type of the program, of any program. Just by buying one, you get an entry, and it will start on the 6th of January. It will run for 1 week, and whoever gets the highest result will win. The first prize is $2,000, right? So it's very nice. $2,000. The second prize is $1,000 cash, that is, and the third prize is the 60K high stakes account, evaluation account, I should say. So it's very exciting. I think it's a great opportunity to showcase your skills. Only thing you have to do is buy an account with us, with the 5ers, and you get to enter and compete with all the other traders we have in our community. And if you think you have a great chance, then for sure I would participate in that. All right, so let's see. I think that's it for today. We have. I want to thank you all for coming by, making our stream, for all those likes you guys have given us during the years, making us grow as much as we did. I would like to thank you all for your support this year. This has been a great year for the 5ers, and personally for me as well. And thank you guys for anything and everything you guys have done in contributing in that sense. I wish you all a very prosperous 2025. You will be seeing more of the 5ers, because we have a lot of projects for you in mind. It's going to be very exciting. The contest, the competition is just the beginning. Wait, and you will see everything we have prepared for you guys, focused on you, on your growth as a trader. So let's see. What else should I say before we conclude our stream of today? Tomorrow, Jonathan will be with you guys. He has a nice session prepared, and I wish you all the best for next year. We'll see each other again next year, and that's it. Don't forget, hit the like button, subscribe to our channel, make it even better, and together we will make 2025 a great trading year. All right, see you guys next time. Bye bye.
Hi guys, so thank you very much for watching the video. Now make sure you like and subscribe, and most of all, go into the YouTube and check our other content that we provide here at the 5ers. We'll see you in the next one.